Mitchell che parlerà per circa un'ora.
Thanks very much for inviting me, and thanks very much for taking your time. This morning I was in Helsinki and it was very cold. It's even warmer here, so that's good. No snow in Helsinki, and I've never been there in February with no snow. And the day I left Sydney, it was 43 degrees and bushfires are everywhere, so we have a crisis on our hands. And at opposite ends of the earth, the crisis is playing out. What's going on at the moment in economics and economic policy is that there's a paradigm shift underway. And the last time there was a serious paradigm shift was in the 1970s, when the monetarism, which has sort of morphed into what we now call neoliberalism, took over the dominant position in the academy, in policy making, from the post-war Keynesian consensus. Now that paradigm shift was, in the 70s. We're now amidst a new paradigm shift. That's being pushed by quite disparate forces, the shift. The first type of agenda that's creating this shift is what I call the anti-establishment revolt that is going on around the world. And this is an expression of just normal citizens realising that the system that promised them so much has failed them. And you can see that in a whole number of ways. Across the border, you've got the Gillettes who are fighting against, Emmanuel Macron was meant to be the saviour of the sort of progressive European polity. Well, that's failed. You're seeing it in the form of the Brexit decision in the UK, and the fact that you've got a whole stack of Labor, rusted on, as we say, Labor voters now voting Tory. And an ultimate expression is that the next US election may well be fought by Trump and Sanders, both of whom are operating under the banners of their respective parties, Republicans and Democrats, but are the anathema to the mainstream of those parties. And that last point is reflective of the fact that the traditional politics in our countries is breaking down. The traditional progressive parties have lost traction, and the traditional sort of conservative liberal parties are becoming more extreme out on the right and doing dirty deals with what we now we call the alt-right or extreme right. So as a progressive person, I've witnessed the fact that the mainstream progressive parties, whatever you call them, socialist parties mostly in Europe, Labor parties in Australia and in Britain, and Democrats in the US, they're losing popular appeal. And that's an example of an expression of the fact of the disdain of the citizens for the way our progressive forces have been behaving at the political level. So at the grassroots level, where we operate as citizens, there's a growing feeling that the system is failing us, this neoliberal system is failing us. The second thing driving the paradigm shift is the fact that there's now a massive dissonance in the policy community. And what I mean by that is that you've got the bias towards monetary policy, the neoliberal bias, which has promoted monetary policy as the primary tool to manage the aggregate economy, and at the same time the suppression of fiscal policy, spending and taxation, and that's exemplified in the Eurozone, that the Eurozone has pushed that ideological bias to its extreme. That policy shift in the last 30 years has now pushed policy parameters to their extreme limits. So we now have negative interest rates everywhere. And we have governments creating debt and bond investors buying long-term debt at negative interest rates. In other words, paying the government to buy the debt. And you have central banks in many countries or in Europe, which is more than one country, obviously. You have central banks who have been effectively funding governments directly and we can talk about how they do that through quantitative easing and these type of programs. Allegedly, because they want to increase their inflation rates, because they're worried about deflation, not inflation anymore. And the European Central Bank has failed to meet its primary mission for years. Yet it's pumping trillions into the European monetary system in the name of trying to get inflation. And despite pushing monetary policy parameters to their limits, we've still got elevated levels of unemployment, rising poverty rates. We've got real wages that are flat, income growth for the normal worker is flat. We've got rising inequality in all of our advanced countries. And we've now got a climate disaster on our hands. And so the sort of game's up. The policy choices are not delivering anything that we want as citizens. And the central bankers are now starting to break ranks with the neoliberal elites, because the central bankers themselves are saying we can't go on like this. Monetary policy is no longer able to do what we asked it to do. And that's happening everywhere. And in Australia, for example, our central bank governor has been begging the Treasury, which is the Ministry of Finance in the Italian context, has been begging the Treasury to expand fiscal deficits, to take fiscal responsibility. And you can see that in very many, that sort of political intervention in many countries now. It's very hard, by the way, doing presentations like this.
È molto difficile fare queste presentazioni così poca cultura, purtroppo.
And increasingly, I'm being invited to have meetings and discussions and give workshops for large financial institutions. Like in September, I was with PIMCO in Berlin and Allianz. And increasingly around the world, I'm being asked to give advice to the big bond investors and the big pension funds. And what they're telling me is why they're interested in my work is because the extremes that monetary policy have been pushed to and the results that has created are undermining their business model, of course. And for example, what's happening in the big European pension and insurance funds is what we call maturity mismatch. Now, what's maturity mismatch? These are organisations that have long-term liabilities that have to deliver cash payments on a regular basis, as you'd understand. And so their asset structure has to deliver commensurate returns, cash returns, to be timed with the cash flows of their liabilities. And what's happening is, with the negative interest rates and the lack of investment opportunities, with the starvation of public infrastructure, the traditional business model where they generated returns off their asset structure has failed. What's happening is this mismatch between the cash that they generate from their assets and the cash that they are liable to pay out to the pensioners and to the insurance companies. And so what are they doing? They're increasingly shifting their assets into more and more risky assets to generate higher returns, and the consequence of that is that they're becoming increasingly vulnerable to insolvency. A very small shift now will send some of your large European pension insurance funds insolvent. And when that happens, total chaos. So they're desperate now. The financial markets are desperate for governments to use fiscal policy and deficits to create investment opportunities via large-scale investment projects in infrastructure, public infrastructure and things like that, because that's their traditional business model that has been. And the last thing they want is a continuation of the austerity that the mainstream economists have been advocating for several decades. And the other thing that the financial markets have worked out is that they've been, this is a colloquial expression, dudded. Is that a word? Dudded?
Dudded. Okay, I'll figure it out. Do you have another word?
They've been damaged by following mainstream macroeconomists. And the reason, an example is there's two good examples. One is the famous widowmaker trade, and the widowmaker trade is that you sell the Japanese 10-year government bond short. Now, why would you sell a 10-year government bond short? Because mainstream economists told them that because the Japanese government was running very large deficits and had large public debt, that eventually the bond markets would demand higher and higher yields on the government debt, and as a consequence the bond prices would fall. So if you sell it short, you can go into some time in the future, buy it for a cheaper price than you contract now and make a killing. The only problem is, and that's the fundamental advice from mainstream economics, the only problem with that is that doesn't work like that. The Japanese government 10-year bond yields have been falling. It's sort of around negative all the time now. And so every time they have these short selling contracts, they lose. And so they're starting to, it takes a while for this to sink in that they've been completely misled by the mainstream of my profession. That's one example. And the second thing that they've started to work out is during the global financial crisis, the mainstream economists said that if governments had as the deficit started to rise and public debt rose, that eventually bond yields would rise dramatically because the bond markets would force, because of the increasing risk, they'd force that onto governments. And as a consequence, bond prices would fall. And so anybody who speculated in that market would risk making serious capital losses. And at the same time, the mainstream economists were telling them that because of these deficits and because of QE, the central bank buying up a lot of the government debt, there'd be inflation and then hyperinflation. And so what's the best asset to invest in when there's an inflationary environment? Real assets like property, things that have capital gains that go up in proportion with the price level. And of course, none of those things happen. So a lot of the big financial investors had shifted their portfolios away from fixed income, government bonds, into real estate and wondered why the returns to their investment funds were low. It was because they made wrong investment decisions. Why did they make wrong investment decisions? Because my profession told them to do this, and they've now worked out after X number of years that my profession, the mainstream of my profession, doesn't know what it's talking about. And Japan's a great example because since its massive commercial property collapse in the early 1990s, it's run very consistent and large fiscal deficits, sometimes up around 10% of GDP, but consistently, and they vary a little bit, but always there. The Bank of Japan now owns about 45% of all government debt. And the mainstream economists have been predicting hell on this earth for Japan since the 1990s. They've been predicting accelerating inflation, rising interest rates, rising bond yields and government insolvency since consistently, and they keep updating their forecasts and they keep getting it wrong. And the fact is that the mainstream macroeconomics that's taught all around the world and that dominates all of our economic policy institutions hasn't got a clue about the world. They can't explain why Japan has very large deficits and zero interest rates. Why the Bank of Japan is holding 45% of Japanese government debt, and they're fighting deflation, not inflation. Why the 10-year and the longer-term bond yields are negative. It's exactly the opposite to what the mainstream theory predicts, and people are starting to work that out now. Now, you might wonder, with a paradigm mainstream macroeconomics such a failure, why has it been unchallenged for so long? Why is it still dominant? And the problem is that the progressive economists, the heterodox economists, so-called, sort of got caught up in postmodernism in the 1970s, where everything had to be deconstructed. And I'm smiling here, by the way. And the research programs of progressive academics became tied up in identity-type research. That we redefined our location in society by our gender or our ethnicity or something like that. And we abandoned the main game of macroeconomics. And so really there's been no contest, and even moreover, the progressive political forces that I mentioned earlier have really converged on the neoliberal economics and speak the same language, use the same neoliberal frames as the conservative side of politics in terms of economics. And so there's been zero contest at the big picture level of economic policy for some decades now. And that's why they've been able to get away with this. That progressive, what I call a progressive surrender to neoliberalism in the economic policy space is very apparent in Europe. Think about the Mitterrand government in 1983 when it turned to austerity, abandoned its socialist agenda. You know, think about Jacques Delors, famous so-called socialist, who has engineered the most extreme form of neoliberalism in the form of the common currency. Think of Syriza in Greece, who imposed dreadful austerity on its people, Socialist Party. Think about Tony Blair in Britain, and we could go on, that this has been a surrender to neoliberalism by the progressive forces. And you can see that there's a paradigm shift going on, because in recent, maybe the last 2 years, there's been increasing media attention to modern monetary theory. And when Mario Draghi gave his final press conferences in October last year, he made the statement, the ECB has to understand MMT, modern monetary theory. And you can see that in the press there's huge attention being given to our work. Just last week, the mainstream financial press in Australia came out with a thing about everybody's got to know about modern monetary theory. And that's an example of, that's an expression of the fact that for the first time in decades, there's been a serious challenger to the neoliberal macroeconomic consensus that the mainstream has been able to dominate. And you can see that the mainstream are sensing that challenge, because you've got all of these senior economists coming out now saying we're grotesque, we're disasters, and there's even a bill a legislative bill before the US Congress to get the Congress to condemn MMT as a danger to American society. And when we started this project in around 1995, so 25 years ago, there was only a couple of us. And we used to laugh that you could count the MMTers on one hand and still have spare fingers left over. And now there's millions of people following our work, and increasingly, as I said at the beginning, financial markets are wanting to know about it, central bankers want to know about it, and that's a sign that there's a maturing going on, and that's driving this paradigm shift. And a sign of the traction that's happening is that the largest textbook publisher in the world, Macmillan, published my textbook last year with Randy Ray and Martin Watt. It sold out within 3 months, and it's now into its third printing, less than a year since it's been produced, and more universities are now adopting it, which means that once we start entering the academy and the teaching programs, that's when the paradigm shift really accelerates. Now, I can't possibly summarise 25 years of work in a few minutes here, but I'll give you a feel for what we think. And there's an incredible amount of misinformation out there. And that's, when paradigms are fighting for survival, of course, that's the way they defend their position by basically lying about the challenger. And I'll just read this out and then I'll give it to... I got a tweet this morning as I was at the airport from an Italian PhD student, obviously mainstream. I'm sorry, but Italy is not the US, and any MMT-based policy would predictably trigger a debt crisis and hyperinflation. Were MMT correct, it would not be in Italy anyway. Spreading these ideas in our context, Italy, is irresponsible and dangerous. So that's a very common statement. And I hear often people will tweet or write on social media or in mainstream media, when we have MMT, things are going to be bad. Or if we ever had MMT policies, it would be a disaster. And the alternative is that progressives are tweeting out there, we can't wait to have MMT because then things will be better. It's as if they think, by both sides, that MMT is some regime that you move to or move away from, that it's a set of policies that you can adopt or not adopt. And that perception of MMT is just plain wrong. What MMT is a lens. It's a way of seeing the monetary system and seeing the capacities of the currency issuer within that monetary system in a more realistic light. It allows you to better understand what the capacities of the government are. In other words, MMT is what is out there. It's not something you shift to. It's not a set of policies that you move to or move away from. It's what is. And it's just a better lens for understanding what is. Because the mainstream economists have created a fictional world, have taught us a fictional world about how the government operates, how fiscal policy operates, how the monetary system operates. It's a fiction. And what MMT does is sweeps away that veil of ideology, sweeps it away so that we better understand what the system is, what the institutions within the system is, and how they operate, and how the government sits as a centrepiece in that monetary system. And it's another misperception to then think that MMT is somehow a left or progressive agenda. It's neither left nor right. because in fact it's just the lens, it's just that lifts the veil of ideology. And a person who had extreme right views could have the same understanding of the way the system operates as me, who's on the left of politics. But this idea that it's a socialist plot just is ignorance. Just extending that logic then, there are really no MMT policies, because to create policy space, you have to apply that understanding, the MMT understanding. Now, how you apply that understanding will depend upon your values. Now, I've got left values, solidarity, collective, looking after workers, looking after disadvantaged people, all of those things. The policies that I will come up with my value system, based upon my MMT understanding, will be quite different to a person on the right who has the same understanding of the monetary system and MMT understanding, but has different values. And so, for example, I talk to the Liberal Democrat government in Japan, who's conservative, but they're increasingly understanding MMT and wanting to use it to pursue their political program. And that's an example of a conservative political force. Now, I'm trying to convince them to be progressive, but that's an example of a conservative political force that has an MMT understanding, applying it. There are no real MMT policies. So to say, if we ever have MMT policies like this tweet, we'll have hyperinflation and whatever, chaos, is just ignorance. What MMT tells you is that a currency issuing government, like Australia, like most governments, that issues its own currency, that floats it on foreign exchange markets, that sets its own interest rate and doesn't borrow in any foreign currency, can buy whatever is for sale in that currency, including all idle labour, and has no financial constraint. Now, that last statement means that when we think in this fictional world we've been taught that taxes pay for government spending, can't. The currency issuer has no financial constraints. We use the currency that it issues. We have to get the currency before we can even pay the taxes. And secondly, when a government issues debt, it's not funding its deficit. It doesn't need to fund a deficit. It issues the currency. And so once you come to terms with that reality, then you understand taxes and debt and in quite a different light. And I haven't got time today to go into all of the detail, but I just hope that I prick your curiosity and you'll go and learn more. MMT also tells you what the consequences will be if you don't have your own currency. The 19 member states we're talking about. And so saying that a currency issuing government has no financial constraint, which is fact, isn't the same thing as saying that they should go spending wildly. Because what constrains a currency issuing government is what they can buy, the real resources that are available for sale. And if there are free real resources available, like if there's unemployment, well then the government has no constraints on its spending. It can always bring those workers back into productive use. But if you've got a situation where all the productive resources are being used and the government tries to spend more, then you'll cause inflation. And so inflation's an expression of the government exceeding its reasonable spending limit by trying to compete with the non-government sector for resources that are already fully employed. And so in that second instance, what the government has to do if it wants to increase its share of resource use. It has to deprive the existing resource users of the use. And a clue to how they do that would be, there's many ways they can do it, but that's where the tax comes in. So taxes don't fund government spending. Taxes, write this carefully, create the real resource space that the government can spend into to avoid inflation. So if there's full employment already and the government wants to expand resource use, then it has to take those resources off the existing users. And one way to do it is to reduce our purchasing power through taxation and then increase its spending to bring those resources back into the public sector. That's a role for taxation. So MMT doesn't say you shouldn't have any taxes. It just tells us that taxes do not fund the spending. They do something else. And the limit on government fiscal policy are real resource limits, not financial limits. And the last thing I'll say is that in 1996, I was a guest of the European Commission at a big workshop in Firenze. And that's just because I've been doing work on Europe, long time study. And I was from a federal system. And this was a workshop talking about the details of the Stability and Growth Pact that hadn't yet been put into the treaty. At that conference, and I said that the decision by the European Commission to enter a common currency would be a disaster. For countries the 19 member states use a foreign currency. Australia uses our own currency. You use a foreign currency. And by surrendering that currency, you surrender your capacity to advance well-being in the face of economic fluctuations. And I was, at that time in 1996, I was laughed at and told that I didn't know what I was talking about because I was an outsider. The fact that the European system has built neoliberalism into its very legal structure, its treaty structure, means that you've built a bias towards ongoing disaster for as long as the system is maintained. And the only way in which you can achieve prosperity, material prosperity, and more in the current environment, meet the challenges of climate crisis, is if you restore your own currencies. Otherwise, you're always going to be bound by the austerity mindset. And I wrote, a couple of years ago, I wrote a 500-page book where I outlined how the European Union could progress. And I concluded that you couldn't progress because you could make the currency system work by having a federal system like Australia, where we've got massive bushfires at the moment. It's shocking. It's going to cost millions of dollars. None of us in different states care whether the federal government spends that money as a matter of national sovereignty, as a matter of the collective. Whereas you don't have a cultural understanding across all of your countries that allows you to have a federal fiscal function. You don't have that. And as long as Germany is in the system, you won't have that. And so you've got a bleak future if you don't restore your own currency sovereignty. Thank you.